China's yuan-denominated loans surged by 16.02 trillion for the first time for the first 9 months of 2023. The United Kingdom imposes sanctions on Israeli settler organizations for violence against Palestinians in the West Bank. And the International Energy Agency predicts oil demand to rise by 860,000 barrels per day in 2024. Good evening, you're watching Q News. Welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on key updates regarding pivotal economic trends and financial shifts. Welcome, and we start off with China, where data released from the central bank showed a surge in the yuan-denominated loans by 16.02 trillion in the first 9 months of 2023. Household loans rose by 1.94 trillion yuan, while corporate loans saw a significant increase of 13.46 trillion yuan. Loans to non-banking financial institutions grew by 188.7 billion yuan. At the end of September, the M2 money supply, which includes cash in circulation and all deposits, expanded by 6.8% year-on-year, reaching 309.48 trillion yuan. Moreover, China is reportedly preparing to raise an additional 6 trillion yuan, that's about $850 billion US dollars, through special treasury bonds over the next 3 years in an effort to boost its struggling economy. According to local media reports, citing sources familiar with the matter, followed Finance Minister Lan Feng's announcement that Beijing plans to significantly increase debt. However, the lack of specific details on the size and timing of the fiscal package left investors disappointed. China's economic growth is slowing more than anticipated, with 2024 growth likely to fall short of the government's 5% target. The third quarter is expected to see growth at 4.5%, marking the weakest pace since early 2023. Here's our report.
China's economy continues to experience a slowdown, with growth for 2024 expected to fall short of the government's target of 5%. The third quarter growth rate is projected at 4.5%, marking the weakest performance since early 2023. In response, Chinese authorities have introduced a series of stimulus measures to counter these economic challenges. The People's Bank of China has taken significant steps, including interest rates cuts and a liquidity injection of 1 trillion yuan to support key sectors like real estate and the stock market. Further monetary easing is anticipated before the end of the year. On the fiscal front, the government is preparing a large-scale stimulus, potentially raising an additional 6 trillion yuan through special treasury bonds over 3 years. This package aims to relieve local government debt and stimulate growth, with details expected to be finalized following legislative approval later this month. The property sector, a major drive of China's economic growth, continues to face difficulties, contributing to the broader shutdown. Inflation remains low, with consumer prices expected to rise modestly, while below the government's target of 3%. Analysts remain cautious about whether the current measures will be enough to meet the government's growth goals. Further developments on China's fiscal plan are expected in the coming weeks as the government continues to take steps to stabilize the economy.
Now, joining us today to discuss the latest developments on the Chinese economy is Tamara Barrow, a researcher in Chinese studies. Welcome to the Qnews Economic Bulletin. Let's start with this question. The Chinese government is reportedly planning to raise an additional 6 trillion yuan through special treasury bonds. How effective do you think this measure will be in addressing the economic slowdown?
Good evening. Welcome to your audience. It seems that the Chinese government took a serious decision to enhance its economy this year. In March, during the National Conference for the Parliament of China, economy was a major topic of discussion between the parliament members, and all of them agreed that the Chinese economy facing lots of difficulties and they need to work on enhancing the growth of the economy. Last month also, there was a meeting Central Committee of China Party under the chairmanship of the Chinese president. All of them agreed to enhance the Chinese economy. It seems that the Chinese president himself is working on improving the Chinese economy. The government also of China have endorsed a set of measures to enhance this economy. The latest one was announced by the Ministry of Finance, which is issuing $423 billion from the treasury bonds to support the economy and other incentives that may increase the expenses and local consumption. Also, the real estate or property sector that suffered from many crises over the past few years. We know that the property sector formed almost 30% of the total GDP. But due to the closure and the decrease in the performance of the economy of China and the increase of debt, the purchase of apartments fall down. So the property market in China faced a great crisis. The Chinese government is working on fixing the issue of the property market, and it took several measures in this regard. To support this market, for example, they canceled some restrictions on buying the property. They also decreased the first installment for buying in real estate. The Chinese government also provided liquidity for banks in addition to decreasing the interest rates while supporting the people with low income in order to support the consumption and increase it, and to fix the issue of Chinese economy suffers from internal and external challenges. As for the challenges at the internal level, it's represented in the property crisis and the decrease of consumption expenses. At the external level, China suffers from other foreign challenges represented in restrictions and the increase of tax of custom rate imposed by some countries, especially the United States of America. As I mentioned, it seems that the Chinese government is working on promoting its economy growth because it understands how the economy affects it at the internal and external level, and how it also affects the economy of other countries.
Okay. However, well, I'm going to cut in there because I was wanting to ask you, Tamara Barrow, given China's significant role in the global economy, do you see this slowdown affecting global trade, perhaps in those industries who are heavily dependent on China's exports?
China is the second largest economy worldwide. It's the largest economic partner for most of the countries worldwide. Hence, any decrease or slowdown in the economic growth of China will adversely be affected on the countries dealing with China. These countries started to deal with the repercussions of COVID crisis and the Ukrainian-Russian war. Thus, any slowdown in the growth of the economy of China will affect the economy of other countries, especially the Eastern Asia countries that mainly depend on the Chinese economy. That's why China is working.
And what might change the investors' outlook?
The Chinese government is working hard to promote its economic growth. I believe that the external repercussions play a major role here in pushing the Chinese government to promote its economy. Also, the Chinese imports decreased last month. The growth rate of imports was 2.4%, which is very low to the Chinese exports. I'm sorry, its exports comparing to previous years. There's a concern for the investors inside China and outside China because they are afraid to invest inside it because of the weak economic growth and because of the commercial war with the United States of America. And the commercial war in the future will be also with the European Union if the disagreement between the European Union and China is not dissolved.
Well, we're talking of disagreements there, just a second. How do you see the ongoing tensions in the Taiwan Strait affecting global trade, especially in those key industries like semiconductors? And what might be the broader economic impact if this situation continues to escalate?
Generally, Taiwan is a cradle of electronic chips. It has the most important company in the world, which is the electronic chips, the TSMC. That's why China is working hard and striving, even the United States of America, that provokes China through Taiwan card. I don't believe that it will make China invade or attack Taiwan to restore it at the military level. This can only happen if the people who support the separation in Taiwan announce the independence of the island. If China military attacks Taiwan, this will have a great effect on the industry of electronic chips. It will also affect the Taiwan Canal and the chips that goes through it. We also saw losses of billions of dollars.
Okay.
If China invades Taiwan, that's why the United States of America is working on establishing electronic chips factories on its territories.
Okay. Well, thank you so much. Thank you so much for, unfortunately, we're just a bit out of time, but thank you, Tamara Barrow, a researcher in Chinese studies. Thank you very much for joining us on our economic bulletin. On a global note, the International Monetary Fund projects that global public debt will exceed $100 trillion for the first time in 2023. Driven by political pressures for increased spending and rising borrowing needs amid slow economic growth. The IMF's latest Fiscal Monitor report estimates that global public debt will reach 93% of global GDP by the end of 2024 and could approach 100% by 2030. This would surpass the 99% peak seen during the COVID-19 pandemic and represent a 10 percentage point increase from 2019 before the surge in government spending triggered by the pandemic. In Europe, the Eurozone economy showed signs of growth, with industrial output rising and lending demand increasing. Industrial production rose 1.8% in August, driven by demand for capital and durable goods. Germany saw a notable 3% rise in output, though its annual performance remains weak due to high energy costs and declining demand from China. Despite the positive data, the European Central Bank is expected to cut rates again this week, with more cuts likely in December as inflation approaches its 2% target. The United Kingdom announced imposing sanctions on Israeli settler organizations for sponsoring violence against Palestinian communities in the West Bank. The government called on Israel to stop settler expansion on Palestinian land. It clarified that the sanctions target 7 settler outposts or organizations involved in facilitating, inciting, promoting, or providing support for activity that amounts to a serious abuse of the human rights of Palestinians. Furthermore, Britain's Finance Minister Rachel Reeves said she would catalyse billions of pounds of investment into growth sectors such as gigafactories, green hydrogen and carbon capture through a new wealth fund and partnerships with pension funds. Reeves said the National Wealth Fund, based on the existing UK Infrastructure Bank, would work with industry partners, including mayors, to deploy up to $36.2 billion of capital. Reeves also announced a new partnership that could boost pension fund investment in UK companies.
Through the National Wealth Task Force, led by Mark Carney. Today, we are creating the National Wealth Fund and making it...
Staying in the UK, as wage growth, including bonuses, has slowed to its weakest rate in over 2 years. For the first 3 months to August, average weekly earnings increased by 4.9% compared to the same period last year, in line with market expectations. This marks the slowest growth since June 2022. The wage growth decrease, combined with a drop in job vacancies, strengthens the expectation that the Bank of England may cut interest rates in November. According to data released by the Federal Statistics Office, Germany's wholesale prices fell by 1.6% in September compared with the same month in 2023. A report released by the Federal Ministry of Economic Affairs and Climate Action showed that Germany's economy continued to show signs of weakness in the third quarter of 2024. The Federal Statistics Office is scheduled to release preliminary data for third quarter gross domestic product at the end of this month. French consumer prices fell more than expected in September, according to INSEE, which revised the annual consumer price index to 1.4%. Eurozone inflation in France, the second largest economy in the bloc, dropped to its lowest level since early 2021, down from 2.2% in August. Price growth across the Eurozone has remained above the European Central Bank's target for an extended period, driven by rising energy costs, supply chain disruptions post-pandemic, corporate price hikes and extensive fiscal support. Spain's EU-harmonised year-on-year inflation dropped to 1.7% in September, down from 2.4% in August. According to final data released by the National Statistics Institute, core inflation, which includes volatile fresh food and energy prices, stood at 2.4% for the 12 months to September, a decline from 2.7% in the previous month. National consumer prices in Spain also fell to 1.5% in the year to September, down from 2.3% in August. Statistics Canada reported that Canada's annual inflation rate slowed to 1.6% in September due to lower gas prices. This is below Bank of Canada's 2% target. Statistics Canada also said that the yearly price pressures are now at their lowest levels since February 2021. Commodities now, and the International Energy Agency has predicted that the global oil market will face a substantial surplus in 2024, while reassuring markets that it is prepared to intervene in case of any disruptions to Iranian oil supplies. The agency reported that the world oil demand will rise by 860,000 barrels per day this year, down 40,000 barrels per day from the previous forecast. For the next year, the agency sees an expansion of 1 million barrels per day, about 50,000 barrels per day higher than expected last month. Oil prices fell more than 4% after Israeli Prime Minister Netanyahu says he is not willing to strike Iran oil targets, which eased fears of a supply disruption. Brent crude futures fell by 4.3% to $74.17 per barrel. That was at 1 o'clock GMT this afternoon. US West Texas Intermediate fell 4.6% to $70.45 per barrel. Gold prices held steady amid the one-week highs recorded in the last session. Spot gold was steady at $2,652.72 per ounce. That was at 11 o'clock GMT. US gold futures rose 0.1% to $2,669.20 per ounce. And in the markets, Boeing filed papers with the U.S. markets regulator on Tuesday to raise up to $25 billion through a combination of stock and debt offerings, and also secured a $10 billion credit facility. The company is seeking to strengthen its finances, which have been under pressure due to a slowdown in production of its popular 737 MAX jet after a mid-air door panel incident earlier this year, as well as a labour strike that has been ongoing since September 13th. While the exact timing and amount to be raised through this stock offering remains unclear, analysts estimate Boeing may need to raise between $10 billion and $15 billion to maintain its credit ratings, which are currently just one level above junk status. World shares had a mixed performance, with Hong Kong's benchmark losing more than 3% in the United States. Early trading, the S&P 500 was up 0.1%, the Dow Jones Industrial Average was down 0.6%, and the Nasdaq Composite was up 0.3%. In Europe, Germany's DAX gained 0.3%, the CAC Quarante in Paris dropped 0.7%, and Britain's FTSE 100 lost 0.5%. In the Asian markets, Shanghai Composite index lost 2.5%, while the Hang Seng fell 4.4%. The Nikkei 225 index traded 0.8% higher, and the Kospi gained 0.4%. Well, that's all for now, and here's a roundup of today's key headlines. China's yuan-denominated loans surged by 16.02 trillion in the first 9 months of 2023.